India's Q2 GDP print is expected to come out on November 30th, that's tomorrow. While most analysts as well as the Reserve Bank of India are expecting the growth to slow down sequentially from Q1's fairly surprising 7.8%, a yearly growth of between 6.5 to 7% for Q2 is likely as per economists and analysts. RBI Governor Shaktikanta Das had also said that there could be a surprise on the upside even as the central bank kept its forecast at a lower 6.5% both for the quarter ended September as well as for the full financial year. Here is how different agencies and analysts are expecting the data to reflect. RBI stays firm at 6.5%, while ICRA is projecting 7% in line with SBI research. Barclays and Nirmal Bank, however, staying in the middle lane at 6.8% for Q2. Joining me on this broadcast is Teresa John, lead economist and deputy head of research at Nirmal Bank. Teresa, thank you so much for joining us this evening, a day ahead of Q2 print to come out, a report card, so to speak, of India's growth in the July to September quarter. How are you seeing the numbers and why 6.8 when there are agencies who are looking at a higher 7% and also the RBI looking at a lower 6.5%?
Right. So we are expecting the growth to be slightly higher than the RBI's original estimate. So even we were around 6.4, 6.5, but we have actually revised up the numbers a little bit to 6.8% based on the high frequency indicators. Could there be an upside surprise that could come maybe from manufacturing, maybe from services like financial services did very well last quarter. Even this quarter, the trends have broadly held up. So there potentially there could be some upside surprise, but I think we've been more neutral and gone with the 6.8%. But I think the main drag is coming from agriculture, although that's only about 15 to 16% of GDP. There's a sharp slowdown in agriculture, mainly because the Kharif crop is expected to be impacted by the unseasonal rainfall that we had, or the erratic monsoon that we had.
Teresa, also take us through what you're expecting outside of agriculture, where specifically when we are talking about manufacturing exclusive of construction, and in that, or rather industry exclusive of construction, that is a segment where we have seen the tapering down impact, and that is something that you have also mentioned, not just for this year, but when you compare the actual print for last year versus your annual projection for FY25 as well as for 26, you're seeing industry sort of not really or services including construction not really living up to expectations.
So industry in FY23, there was some sluggishness mainly because of the high commodity prices that we saw. Over the past two quarters, as in the second quarter, FY24 and first quarter, we are expecting some recovery. First quarter, we saw some recovery, but not to the extent that was expected. So we are expecting, some improvement in industry, excluding construction. That's mainly coming from the fact that the raw material prices have come off, and so that is supporting all the revenue growth. So most of the companies has been muted. Profitability is high mainly because of the decline in commodity prices that we have seen.
Okay.
So that's what is supporting industry. In services, the slowdown is, we had a strong post-COVID recovery in sectors like, trade, hotel, transport, and communication after the lockdowns. That is tapering off to some extent, but they will still continue to do well, but coming off on a high base.
Okay, Teresa, take us through your medium to long-term view on India. The medium term is specifically in the context of very, very volatile oil prices. Then, of course, the dollar index also reaching new highs, always been, above $100 or so, the index 100 points or so. And then add to that, of course, you have a two-front war on in the world. You don't know when those wars are going to end, and overall the slowdown in demand from the US and in China all sort of also playing spoiled sports, so to speak, for India's export story. So medium term, what is your horizon really looking like?
So, if I say relatively near term, so the next 2 to 3 quarters, we're expecting a slowdown in growth even from current levels. So, we expect growth to slow to around 5% in the fourth quarter of FY24. But on a relative basis, India's growth will be, stronger than many of the other economies. We probably will be the fastest growing emerging market economy, both in FY24 and FY25. Actually, slowing global growth means generally means lower commodity prices, particularly for oil, and that actually bodes well for India because we are a commodity importing country, and if you have very high oil prices, that leads to pressure on a fiscal on a current account. If oil prices, remain relatively benign, at least trade in the 75 to 85 range, I think that is good for India. So slowing global growth, that way works well for India. That said, geopolitical risk, presents some upward pressure on commodity prices relative to what you would have seen otherwise in a global slowdown scenario. But overall, we are expecting, oil prices to remain range bound. So we think that will be supportive for India. But apart from that, a global slowdown means, a pressure on our exports, and even the services exports, which have been doing very well so far, could see some pressure if the US goes into a full-fledged recession. So I think India will not be immune to the global slowdown, but relatively resilient when compared to most of the other emerging market economies.
Okay, since you mentioned US and the likelihood or the probability at least of US going into recession, what are your estimates suggesting right now? Are we really looking at a soft landing, or is the soft landing going to be elusive? Because there were talks of recession, there were talks of no recession, a soft landing, and now there are talks of no soft landing and back to recession. How are you looking at the US story playing out?
So our view is that, I mean, the recession, everyone has been expecting that, but it has never come through. I mean, it was expected to come through in the second half of 2023. That is not really played out. So probably that could get pushed back. Some of the research that we have done suggests that when we look at a Fed-led recession, so when you have high commodity prices, high inflation, and the Fed tightens because of that, usually the recession, the result from that are relatively shallow. So which means you don't go into a very deep recession. So the decline in growth is around 0 to 1%. So our base case is that you probably could have a recession, but it'll be a relatively shallow and a short-lived recession. So more inclined towards the not a complete soft landing, but
Not a very
definitely not
hard
a hard
landing as
landing.
well.
Yeah, yeah,
Right. So let's come back to India. You gave your, your projections, your estimates for the next 2 quarters, 3 quarters or so. But a slightly longer term view, if you were to look at it, there are multiple reports emerging, and there are global brokerages and there are global ratings agencies all coming out with their own estimates. And of course, the Indian government itself has its own targeted, projected, ambitions, which started with a $5 trillion economy. Now reports coming in of 7 trillion. In fact, just this morning or last evening rather, CLSA has come out with its own projection saying that by 2052, 5 years after India completes 100 years of independence, or in India as we are referring to the Amrit Kal, India would actually be the largest economy of the world at $45 trillion. Some other reports also suggesting that India's sustained momentum of growth is likely to be between 7% to 7.6%. What are the numbers that you want to really put out here and really help us arrive at a very sustainable, achievable, long-term averaged out growth target? And where would that take us, let's say by 2030, 2047 and beyond?
So if you look at the Indian economy, I think sustainably we can grow somewhere between 6 to 7%. Maybe over the next a decade or decade and a half. Probably after that, as all economies, like you're seeing in China, you're seeing growth slow down to below 6%. Even India might face a similar scenario because I think up till 2030, 2040, you have the benefits of demographic advantage, etc. Then after that, even the Indian demographic could start aging. So in the near term, or I mean near term or medium term, we do have some tailwinds working for us as long as we kind of leverage that in the right manner. So I mean, we have a very young workforce, but they need to be skilled. We need to provide them adequate jobs. In the per capita income needs to improve. So if those kind of structural drivers fall in place, I think India right now will probably move. We are like the fourth largest economy. We could move up, or we're probably nearly already there. So yeah, by 2040, 2050, I don't have an exact estimate of what would be
Yeah.
the size of the economy, but broadly, if you grow at around between some 6 to 7%, you can probably look at kind of doubling the economy every decade. So if by in about 3 to 4 years time, you might be a 5 trillion economy, and then every decade from then, you could probably double the size of the economy.
So 2052, 45 trillion seems like a bit of a long shot to you?
Yeah, I mean, it seems optimistic. I mean, they're also talking about being the top most economy in the world. So whether that will play out, remains to be seen. Because if you see India's growth trajectory, it's never been linear.
Yeah.
It's India, I would say, has largely grown in spurts. So it's difficult to say. I mean, when that growth spurt happens and when we see a slowdown. Right now, things seem to be working well, from a macro perspective as well. But per capita incomes definitely need to move up for us, to become the developed economy status. So we still just over $2,000 per
Right.
capita income. So I mean, right now we're seeing a scenario where we are actually have a K-shaped recovery, where the top half, or maybe the top 10% is doing very well, but
Yeah.
they're not able to carry along the masses in that growth that is happening currently. So I think some of the structural drivers need to fall in place for us to probably be the largest economy in the world.
All right. Well, those structural reforms, says Teresa John, lead economist and deputy head of research at Nirmal Bank. Teresa, thank you so much for joining us this evening.
Thank you.